now we go. So sorry for that. I did not see that the microphone wasn't connecting. So let's start this again. Hello and welcome to another episode of Daily Market Mastery with me, Christian Rauchenwald, on this Sunday, Monday. As always, before we jump into the markets, let's get the usual disclaimer out of the way first. Everything that I share with you in this live stream / video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. And besides that, all the tools that I'm using, so the charting software, the broker, the strategy I'm following, and so on, are all linked in the video description down below. And the one thing I recommend, as usual, is check out the Elliott Wave Principle if you haven't done so. You can read the book for free online when you're using the link in the description down below, or you can use the same link to get yourself a physical copy like I did. Now, with that out of the way, let's jump into it and let's say hi to Akashi. Hi, Akashi, great to have you here. Yeah, thanks for the notice. I noticed, yeah, that the microphone wasn't working. It also seems like we have bad upload. Just a second, I'm gonna check. Yeah, I don't know what. I know. One second. I just need to user scripts terminate. There you go. So I'm currently synchronizing our Nextcloud instance to Dropbox. So we'll have to change that actually runs at 15, yeah. So to actually make sure that the uploads are not running at that time. Okay, good, fix that. So uploads should be better, which means the stream quality should be better. Yeah, regarding the bandage, so if you're curious, just gonna circle back. So that's what's left, like a sticker. Basically, cut myself here. Just came to look at the yeah, of course, he wanted to see me suffer. Yeah, so and had the bandage that you saw in the picture on Discord over the weekend, and actually had an appointment at our general physician practitioner today to basically get it removed and just get a bandage, whatever it's called, plaster, sticker, I don't know, band-aid. Yeah, thank you very much. And yeah, also to get what's tetanus in English? Yeah, like some vaccination. Yeah, so basically, yeah, so it's less bothering now than it used to be. Anyway, we have a pretty much break-even start into the week. As we can see, we're at minus $15, so really not worth mentioning. Markets open in 1 minute, or actually are opening right now. Yeah, let's see, not much changes here, so we're gonna jump and start to look into our usual suspects. Starting with GameStop, as said, we're still waiting for either a break to the top at 25.24, which in quotes would prove me wrong, or for some downwards movement to actually confirm my assumption that I've been sharing for the last couple of weeks, that we will first go down and see the $15 mark to finish a bigger corrective pattern before we will go up further. Yeah, so confirmation to the upside would be if we break the 25.24. Confirmation to the downside would be if we go below, for example, what do we have here, 19.42. Yeah, as long as we just move along sideways, there's not much to do but wait and to keep selling the covered calls every week. I'm gonna have to create the order to buy them back. So just a second, buy back for $1. So we want to close them out once we can close them out for $1. Good till canceled. And yeah, technically we could also close them out for whatever, 70% of the profit or something like that. But so far I've been closing them out always for $1. So limit price entered invalid. Okay, so I had caps lock enabled. Yeah, 0.01. So we buy back 5 pieces of the October 11th $30 call. Yeah, for $1 once the price falls that low, if possible. So, and then once we bought them back, we're actually going to sell new covered calls for the week after that. Obviously, we're not earning a great fortune right now with those covered calls. We can see that we have around $14 in premium times 5. So we have around 75 or a little bit below. Especially if we consider the $1 that we pay buying it back, so we have like $70 in premium for the week. Nonetheless, it's $70 that we get just for saying we are willing to give away our shares again for $30 per share. So better than just holding, in my opinion. Now, moving on, the next thing on our list, as usual, should right now be Novavax. There we hold a call option that expires in January. Here we are expecting, I don't know in which episode we labeled the potential downward move. We can see that I have not aligned this yet perfectly with the point here. So our last episode was on Friday, I guess. Friday was October 4th, and our episode was around here, so around this area. And I already pointed out that we expect a drawdown into the $13 area where we would have an overlap of two things. First of all, if we assume we have a free wave corrective pattern, God, sometimes I love Elliott Wave Theory, then we assume that this here is A, B, and wave C has a target at $13.19. And then additionally, if we assume that we're correcting this third wave here, then the 61.8 retracement wasn't hit here yet. So it made it possible that we will actually get that other push. And we can see that we got it pretty much exactly plus minus 2 cents. Obviously, I could still be proven wrong. We could end up going down here further. Then the 78.6 retracement level would become relevant. But from the looks of it, as said, this will be 1, 2, 3, 4, and now we should get our wave 5. And a wave 5 target would be between 15.17 and 16.55 to finish a 5-wave impulse up here. As long as we stay above 13.17, that labeling holds, which means right now, we might actually in a second check if we want to switch our positions here. Right now would be not such a bad entry in my opinion, because we have little downside. We're currently at 13.43 and the stop loss could be set at 13.17 with a decent upside to the top, especially if we consider the bigger pattern where if we are indeed now in the 5th wave, we would expect to reach the $29 to $59 mark, which is a couple 100% upside. Considering all of that, we're going to take a quick look at Barnes & Noble Education, where we are assuming or expecting a fall down into the area at 845, unless we break 974 first and would actually want to buy a couple of shares here. But considering that we're still not there and that there is the chance that we will not get to see this, I'm actually going to remove my pending order here. And instead of doing that, we're actually going to buy a few more. So we have $190 in spare capital, so which means we're going to buy ourselves. So that's 248. Nope, we can only buy ourselves one additional call. So not GameStop, cancel. So the Novavax, January 17, $20 strike price. We're going to buy ourselves one additional call for that. Mid, yep, is it gonna fill? Okay, price going up a little bit. Let's do it like this. There we go. So we got that filled. So we now, instead of one call for January 17th, got a second one, a little bit, paid a little bit more for this one. So we paid $95 for the first call and now $130 for this one. Which means our first call is actually in profit and our second call is now break even in quotes. And to increase our exposure to Novavax, because we still hold the opinion that in Novavax we will get to see our 5th wave move up. Now overall risk is basically, if we take our average price is 112, so we have now $230 risking on the Novavax play. If we look at that, I think I have it saved somewhere, just a second, Novavax, and that now changed. So just to update it here. So we have now 2 and our average is 1.13. So the call looks like this. And if we scale that, we can see that basically if our price target holds true and we reach the $29 mark, then the $230 investment would pay out. So if by January 17th we reach that $29 mark, the call would pay out like this, so which is like 5 times the invested amount. If we reach the 100% target area, which actually would be here, we can see that the payout would be substantially higher, especially now that we have 2 call options instead of just one. Now, obviously, if we finish below, we can see the break-even price is 21.13. So if we in January are below 21.13, then we basically have a loss because our option will be not worth more than what we paid in premiums for it. And if our maximum loss is limited to the $226 that we paid in total. Before that, so if we were to see a strong rally before that, so let's see by the end of October, for example, you can see that the curve looks different and that even at, I don't know, like at $20, we already would look at a small profit. However, it's not worth to sell this option early because this is going to be, in quotes, not a gamble, but a calculated risk based on the overall pattern, I think, that we see on the 8-hour chart, and not even the 8-hour chart. So let's 3-day chart, yeah, on the overall pattern that is 1, 2, 3, 4. And again, assuming that we're now in wave 5, we should get upwards movement and ideally finish by January already. So by January 17th is when our option expires. And if I'm right with my labeling, we should already be there by then. If I'm wrong, it's going to be $200 down the drain. Unless I get a clear signal before that I'm wrong, and I might still be able to sell the option for, obviously less than I paid for, but basically reduce the damage. But I think that's not going to be worth it in this case. So it's just going to be either I'm right and we'll get a payout here, or I'm wrong and we don't. And that's going to be that. Now, zooming back in, 1-hour chart. So with that, we covered that. Let's circle back to Barnes & Noble Education. There, we're still waiting. So we labeled it the last time. So we have the assumption that this is a 3-wave corrective pattern where we already reached the minimum target for that 3rd wave. However, we see the 100% target area would be here, which tends to be very close to the 61.8 retracement of the previous wave movement, which if we sub-label this 3rd wave move or wave C move here, we have the assumption that this is 1, 2, 3, 4, and now wave 5. And we can see the forecasted wave 5 minimum target is also in the same area. So we actually expect to fall into the area of $8 to $8.42 in another push down to mark the end of this correction. I could be wrong with this, but this is why we had the pending Barnes & Noble Education buy order at $8.45. We have alert on both sides. If we go higher than 974, so if we go higher than 974, then likely the correction is finished here and we see upwards movement. If we don't break this first, then we should break the 845 first. My wave counts don't match, so my conclusion also differs. It's hard. On which? On Barnes & Noble or on Novavax? I'm going to wait for you to reply so we can actually work this out. Never hurts to have a second opinion, or everyone has a right on my opinion. Forgot to start toggle. So yeah, like just tell me which one. Delay shouldn't be that high. I mean, the stream is set to, it's set to normal latency. I actually should start setting it up as ultra low latency so that there's less delay. Yeah, we'll have to think of that, or we'll recall that tomorrow, hopefully, so that one goes easier. I'm gonna assume until I see a reply that that you disagree with Novavax, and I'm gonna quickly take that from the topic. I think it's the most profitable trade right now. Obviously not in a day or in a week, but I think that one actually will pay off hugely. Are you saying Novavax? Yeah. So let's take it all the way from the back. Yeah. So maybe I'm wrong somewhere. Okay. Yeah. So if we look at a monthly chart, yeah, that might be the one point where one could argue. Yeah. So if we look at a monthly chart, we have this development here, which means we're going down. I'm not sure if this candle down here is a fluke or if it actually happened. If it actually happened, then we would have potentially 1, 2, 3, 4, 5 corrective wave. And then either the corrective wave is already finished and we get the next 5 waves up, or this is, for example, 1, 2, 3, 4, 5. And we're right now, so that will be wave A, wave B, and then we go down in another 5 waves. Even if that is just wave B, it would have to, or it would need to subdivide into A, B, C. So it would be 5 waves, 3 waves, 5 waves, which still would give it quite some upside. Yeah. Now, considering again that this might be some data fluke because it's not the first time that it happened or might happen that there is some wrong data on the chart. Yeah. I'm labeling it basically from January 24. So it's a relatively shorter period, but overall still, if we look from January, we have on the daily chart visibly 1, 2, 3, 4, 5 for wave 1, A, B, C for wave 2. Yeah. The retracement on that one, I don't recall it from the top of my head, but it's probably not perfect. Yeah, so we see we break the 78.6 retracement, but that's okay. Now, on the other hand, very often when we have a first wave, the third wave will bounce at one of the 38.2 or 61.8 extension levels. And we see that in this case, it's not exactly the case because we don't fully reach the 338.2, but we bounce slightly below that. Yeah, so that aspect here is not perfect. But even with the naked eye, we can probably identify 1, 2, 3, 4, 5 to make this a strong 5-wave impulse upwards, which then means we would need, or the next thing we would be looking for would be the correction of the third wave that we have here in a visual A, B, C 3-wave move that doesn't fully reach the 61.8% retracement level. Yeah? However, if we consider that this is a 3-wave corrective move, we can with the naked eye see A, B, C for wave B, so a 3-wave move here. And if we take an expansion A, B for wave C, we reach at least the minimum target for that wave C. So all of that kind of fits the bill. Yeah? Now here it gets a little bit muddled. So that part here is like, could still be some way part of the correction or not. Yeah. So then the wave 4 would officially not be here, but might be down here. But overall, we have basically what looks to be the end of wave 4 and gives us then wave 5 next. Now again, this whole area here is hard to label, at least for me. But if we then look closer and just on the last couple of days here on the hourly chart, we can clearly see again a 1, 2, 3, 4 impulse. Yeah, so it's also following here rule of alternation, because if this is wave 1, wave 2 retraces 38.2%, then we have wave 3 and wave 4 retraces 61.8%. Yeah, and which means this would actually mark the perfect smaller 1, 2, 3, 4, 5 pattern where we would now get the next push up to finish another impulsive wave upwards. Yeah. Again, the area here is a little bit harder to label. This is potentially some corrective pattern A, B, C. Okay. But if we just stepwards, so if we go to an 8-hour chart, so everything from that low point here, it's hard to say, is this 1, 2, 1, 2, 1, 2? Yeah, so are we now in a third wave of a third wave of a third wave? Or is this, like I mentioned in previous streams, maybe wave 4 officially ends here, and this is actually a zigzag followed by a triangle. Yeah? So doesn't make a huge difference in my opinion. However, the important part, I think, is that we have a lot of things that align very well. So, of course, there are a few things that are not as nice as we would like them to be. But overall, we have a visual, nice 1, 2, 3, 4 pattern, while that wave here, A, B, C, divides nicely, although visually not as nice. This one divides even nicer. And even though we were not sure if this is the end of the wave 4, if that is the end of the wave 4 and there's a triangle in there, we got a nice decent breakout that on the hourly chart shows again another 5-wave pattern in development to confirm. And then on top of all of that, if we use Kennedy channeling technique, where we use the base channel by having 0.0, 0.2 and a parallel through 0.1, the moment we have a breakout from the channel, we are in wave 3, according to Kennedy channeling technique. Then we use the acceleration channel by taking whatever high point we have, so 0.1, and then whatever high point we have. For example, we had this high point with a parallel through 0.2, and we extend it, and when we have a breakout to the bottom, we are confirmed in wave 4. Now that doesn't happen here, doesn't happen here, but after that point here, we actually get the breakout to the bottom to confirm that we are in wave 4. then we can draw a trend line, or also a channel if you want to, but only the top matters, so a trend line is enough to connect wave 3 with whatever high point we have here. And that is our deceleration trend line or channel, where once we have a breakout to the top, we actually are confirmed in the 5th wave. Yeah. Additionally to that, very often the 4th wave will retrace to the top or median of the base channel. In this case, we move reasonably close to the top. We don't touch it, but we get close enough. And so Kennedy channeling technique would confirm that we are at least looking at this here now in the 5th wave of an impulse. The labeling or the subdivision of separate waves also confirms it, in my opinion, good enough. Of course, there are areas where it's trickier. So like labeling this correction, not super easy, I would assume. Labeling this area here, not super easy. But overall, there are just so many aspects that point towards we are now in a 5th wave of an impulse. And very often that 5th wave follows, as said, an expansion for the 3rd wave. So if we take starting point at 0.2, then 0.3, and then our 0.4, then the 61.8% level of that expansion and the 100% expansion level mark the target areas for that 5th wave. So, and that 61.81 is the one that we should reach at least. Now, the challenge or the problem here is there's obviously no guarantee that it will happen till the 17th of January. But if until then we already get some decent upwards movement, I can basically either just take the existing profit. I mean, on that day, we have to be at least above 21 for my options to be in profit. Yeah. But before that, in November and December, I will also be able to close out the options. So we can bring that back over here. So if we look at November, let's say middle of November, we can see that even if we are, I forgot to save that, by the way, so I have to save that trade, override existing, yeah. So even in November, if we are at $18, but somehow the pattern changes, I can make a small profit and close those options. And for example, maybe get ones that don't expire in January, but expire later. So to buy myself time. But overall, I think the pattern is relatively clear. So I think the big question is just, will we reach the $61 mark? Yeah. If we use Kennedy channeling technique, by the way, and we now have are confirmed in wave 5, then we also have our destination channel by taking 0.2, 0.4, and with a parallel 2.3. And the 5th wave should at least touch the median or in some cases the top of that channel. Now, obviously, if our wave 4 officially only ended here or here because we got a triangle here, then it changes a little bit how that channel looks like. But we can see that basically if we would want to catch that median, we already would need to reach the $30 mark. And if we would want to catch the top, well, we definitely would need to hit the $60 mark. So yeah, I mean, it's possible that I'm wrong somewhere here. It's possible that the correction here isn't finished or so, but considering everything, labeling from a recent low point and working out also confirming some of the subwaves along the way, I think that it's a very, I don't know, not perfect, not like you would see it in the book, yeah, but close enough to perfect labeling and pattern here. So, and even if the whole thing here will just become part of a bigger correction and Novavax is set to go broke, yeah, then we still would expect 5 waves, 1, 2, 3, 4, 5, and then A, B, C, and then another 5 waves to finish a bigger pattern, yeah. The only alternative would be that this is A, B, C, and now we are forming 1, 2, 3, 4, 5 down, but I don't think that's the case, because if that were the case, then this here, I mean, maybe I get proven wrong right now because I'm not sure if we checked that before, but then no, not happening, yeah. If this is a 3-wave corrective move, we would expect wave C to at most reach the area of the 161.8 expansion. Maybe I've seen 1 or 2 cases in the Nasdaq and similar indices where it went a little higher, but we definitely wouldn't have had this move. So I think any kind of labeling where we look at this as just a correction before we continue the journey downwards doesn't hold up, because this move is way too big for that. and it's such a strong move, which usually points toward it being a third wave. Just like in relation, this candle here is a strong move in relation to that entire movement, pointing to it being a third wave. So it just means that it's so likely, or so much more likely, that this is 1, 2, 3, and then we should have wave 4. I mean, one could argue that maybe that is 1, 2, 3, 4, 5, but then the wave pattern doesn't look nice enough. So to justify that wave 3 only goes here or here, and that's 4 and 5, then wave 4 would be way too short in relation to wave 2. And yeah, so also there is an argument that can be made that we actually are having a triangle that finishes here and officially our wave 4 ends here. And that argument is also the rule of alternations, that if we have a simple corrective pattern, A, B, C, so 3 waves in wave 2, wave 4 should be a more complex corrective pattern, which we would have if this is A, B, C, and then wave X, A, B, C, D, E for a triangle. Yeah? And we can double check wave 2 is any corrective pattern, but never a triangle, which means it could still be a combination that then ends in triangle. And then so I'm using the one-page cheat sheet that's also linked in the description below. And then wave 4 can be any corrective pattern. Yeah, and we probably, I mean, there are options where all of this is some kind of bigger double zigzag pattern or so. So this is ABC, then we get another corrective pattern, and then we get another zigzag. But even then, while it might screw my option because then we run out of time, yeah, with an upwards move, we shouldn't get much lower than where we were there. So at most, we should then maybe reach the $8 mark here. And it still doesn't change that then over the next couple of weeks or months, we should still get to see the 5th wave move up. In my case, that would mean that I burn $230 for the 2 call options. But then we basically get a clearer corrective pattern picture, and then we get our 5th wave move. However, the one thing that I think speaks against that is if we look here, so we have basically beginning of February till end of February. So we have 1 month for our wave 1. Then we have March and half of April, 1.5 months for almost 2 months for wave 2. Then middle of April till middle of June, so May, June, so 1.5 months for wave 3. And then we have June, July is 1 month, August 2 months, so that was middle of June, no, beginning of June, yeah. So July 1 month, August 2 months, September 3 months, yeah. Actually, that would fit with 4 here, so there are like different things how to look at it. So wave 4 could technically be here because then it's 2 months, and then we would actually expect our move up here, which already then started in the beginning of August. Now we have October, so we already had 2 months. We would expect it to take between, times are really the thing where I'm not that good at. So timing forecast or time forecast. But I would expect it to take between 1.5 months, which already is over, and 6 months the most. Yeah. So, and if we have August till 6 months, yeah, then even then we should already be fairly enough up, because the goal would be then at the end of that time to finish that wave. So we should already be above the $20 mark. So yeah, like, I don't know. I think it might make sense to go either by shares, yeah, or when as far as options go for Novavax, to say instead of the January, maybe go for the April ones, but then we can see that the price, so it's already twice the price for the same, or the premium that you have to pay to get the options is already pretty much twice as much, although it buys you a couple of months. So I think going with the January options and then either rolling them at some point, or just taking that loss and then readjusting and maybe getting fresh options then when they get cheaper, because as time passes, they also become cheaper unless the price goes up, in which case we already profit from the options that we have with January expiration. Yeah. So yeah, so I think, so like, I don't know, that covers it from my side for Novavax. So if you still disagree, so if you still have a different labeling, then please just share like with which part. So either with the overall labeling, so you don't think that we are in an upwards movement here now, or you disagree with that wave 4 is finished, or you disagree with the small scale labeling that we have on the hourly chart, that we are right now in a 5-wave impulse up. So I think those would be the 3 points to potentially disagree with. So yeah, I'm just gonna have a sip and wait for your reply, so then we see if no reply comes, it's also okay. But I think the labeling here is really solid. I mean, it can still turn south, the pattern can still get invalidated, but yeah, if I would have I don't know, a couple thousand spare gambling money right now or so, I probably would throw them in Novavax. I probably would have thrown them in Novavax already a little sooner. But that's just what I would do. Please, yeah, like again, do your own research and so on. And pretty much only because the pattern looks clear in so many aspects, and I don't see any alternative. So I fairly certainly can rule out that this is a corrective pattern, and if this is not a 3-wave corrective pattern, then we are still missing. Thank you, Akashi. Yeah, so yeah, so we're still missing a 5th wave here. So of course, like all the tools that I'm using, so when I use the expansion to say, okay, we would expect it to at most reach 161.8 if this were A, B, C followed by downwards movement. Those are only guidelines and things that based on experience happen most often like this, but I'm sure sooner or later there will be an exception to that as well, or when we get surprised. So those are just additional aids to confirm or invalidate the pattern that we assume. Yeah, but I don't know. Like I really think, I mean, there is the chance we're in a stupid corrective pattern. I assume we finished here based on Kennedy channeling technique. Wave 4 should have finished here. But it's possible that it's a bigger corrective pattern and that we still get sideways and maybe slight downwards movement. And then my option position is obviously, yeah, like might be then worthless, or I'll have to take the loss here. But even so, I think the pattern is quite straightforward. And if the correction drags out too long, then the time intervals between each wave pattern just don't hold up anymore. And so I think it's really likely that over the next couple of weeks and months, we get to see strong movement. And that would be, even from now to the $29 mark, it's still more than 100% gain. And if wave 5 actually goes above and anywhere near close to 100% expansion level, we're talking still about close to 500% gain. So, and that's with shares. And the option, obviously, if it happens in the right time, would pay off even better. Yeah, so with that, we covered Novavax and Barnes & Noble Educational, or education, not educational. Yeah, I said so here. It's going to be a pity that I miss out, but we still have a little bit spare cash left. Yeah, so I'm going to close out the balance as so often, configure currencies, close out, transmit, and close the spare window that we don't need. Yeah, so we still have a spare $67, and we want to buy at 8.45, so we can at least buy a little bit. So 67 divided by 8.45, so we can get a decent, at least 8 shares. It's not a lot, but it's better than nothing. So we can set our order again, so increase our small position by 8 shares if what did we say, 8.45 is the price we want to enter at. Limit order good till canceled, 8 shares, $67. Okay, 7 shares. We could obviously buy more because we also have excess liquidity on the margin account, but I don't want to use that, because then if a position falls, it risks that other positions get liquidated. So we're just going to use the money we have. And pretty much the only reason we have the margin account, because it gives us the possibility to trade all 4 option levels instead of, like Olga pointed out in one of the streams, only till option level 3. So now we have basically closed out, or we canceled the original Barnes & Noble position for 20 shares, instead got another call for Novavax, and now have another pending order, because I still assume that we will get to see that move down into 8.45. Maybe we could get in 5% better at around $8, but I think it's better to just make sure we make the entry here. And from there, we should get another move up. And if or when that happens, we're going to look again closer at the whole overall picture there. Now, moving on, so we had GameStop, we had Novavax, we had Barnes & Noble. We can look at Grab, where we hold our long-term position. I think that's also going to be a nice play. Yeah, like speaking of Olga, wondering where Olga is today. Yeah, probably has better things to do right now. So yeah, it's always nice when he's here because he shares a lot of like really, really interesting things, and he knows so many details that I honestly just don't know. Like, yeah, like about, for example, that without the margin account, you can still trade up to option level 3 instead of level 4 and so on. Yeah. So always pleasant to have his input, but yeah, like I understand that not everybody can drop everything every day to just join me here. Yeah, so grab, I think there are like really two options. I mean, we're looking at a weekly chart, so it's really a long-term play, and the option that I have is for January 26, yeah. But here it might also make sense. We can look at the pricing for that. So grab, we can see that for January 26, the option prices are like $65, $45, yeah. So they are not too excessive. We could also go for January 27 options, which are also not too excessive, so they don't cost a fortune, with like $95 here or $92 here for the $4 option. So if this is indeed the bottom and we get to see Elliott wave pattern develop, we would expect that this is wave 1, 2 in some form, and we would expect to go up here, which is still more than 100% upside just for wave 3. Which then should develop. Obviously, timing is a big question. Wave 1 here technically took a year. And if that's the case, wave 2 might have finished here, which would then be also roughly less than a year. But then wave 3 would already be too long. So there is the chance that it will not turn into any kind of proper pattern and we just go down. So I also wouldn't bet the house on it. There is the chance that it again takes months before we see a strong push up, and maybe my January 26 is going to be too early to profit from that move. But it looks like we may have either the end of the downwards move and we'll get to see a 5-way move up, or if not that, then at least a ABC move, which means there should still be upside as well to bring the option in profit. But yeah, it's going to take still weeks or months before we are proven wrong or right on this one. Yeah, immersion, we're still waiting here, like already since end of August, basically, for a visual either strong upwards movement to provide us with confirmation that we indeed finished the correction here at the 100% expansion level and the 61.8 retracement level, in which case we would then also be in 1, 2, 3, 4, and wave 5. So with decent upside to the top. Yeah, not 100%, but still like 60-70% upside for that wave move. Costs, yeah, same thing. Also waiting to see if the 50% retracement level actually marks the end of the correction and we indeed are in the next upwards impulse, or if there is more downside to come. NEO we got out. Yeah, recently we basically got out here. We still haven't reached the minimum target, assuming that this will be wave A, B, C. So there might be further downside. Yeah, so we also didn't reach at least the 38.2 retracement level, assuming that we're correcting this entire move here right now. So although with the naked eye, it's possible that we're only retracing this move here right now. I'm going to try to adjust that. Yep. So if we're only retracing this move, then we already reached 38.2% retracement level. Oh, no. We actually have to consider that. 1 second. So, because here, oh no, there's 161, there's the 100. Yeah. We actually reached the 100% retracement level. So it's actually likely that we finished A, B, C. We're not yet retracing the whole thing, but we are retracing only this third wave here. We can see we bounce exactly. Oh no, if it's just for the third wave, we break through the 38.2 retracement. If it's the whole move, then it would also be a breakthrough. Yeah. So okay, we'll have to wait and see. I think it's more likely that we currently have 1, 2, 3, 4, and we'll get a push 5. However, that will then finish. But then we would need to get at least up till here. I'm not sure if that will check out. 3, 4. Or maybe we only go barely higher than we were here. So maybe towards the $8 mark, but not higher. And then we get a bigger correction to correct this entire move. So we'll have to keep an eye on it. But I think we got out good at NEO because even if we get another little push up here, it's only inconsequential more profit that we could have taken that should then anyway be followed by a correction downwards. So, but we'll keep an eye on it to know when a re-entry makes sense. Yeah, moving on, I'm gonna have a sip. Don't forget to hydrate, guys, and potentially girls. NVIDIA, an interesting development that we have here with basically breaking or reaching 127.81, which means this point here is higher than this point. Now with the naked eye, we can see 1, 2, 3, 4, 5 here for a 5-wave impulse. We can see A, B, C for a correction down. It retraces almost 50%, which means we should be in the next 5-wave impulse up, which however brings up an issue because we did not retrace the entire move here. We did not reach the 38.2 retracement line here. So, which brings up two options actually. Yeah, so it's not that, I mean, A, B, C, but it's really, I mean, here we can see 1, 2, 3, 4, 5 for wave C, and here 1, 2, 3, 4, 5 maybe as well. Yeah. So how do they correlate? So low point. So it's within boundaries. So maybe we are really looking at this. So it's like hard to label like that, but maybe we are looking at this. So then we would have to have here 1, 2, 3, 4, 5. Yeah, it's tricky here. It would be a flat correction where wave B makes a new high. But it's possible. So I'm not going to bother. We don't have any exposure, but I think that might be a likely scenario. In which case, then we are right now in the third wave or in the beginning of the third wave. And this third wave here would start with 1, 2, 3, 4, 5, wave 2, which means we should expect relatively strong upward movement soonish. I mean, obviously, right now we finish 1, 2, 3, 4, 5. So there should be a small correction as well. But then we should be in the third wave of this potential 1, 2, 3. 1, 2, 3. So we should be in the third wave of a third wave of a third wave then for potential strong upward movement. Yeah, so like really, really strong upward movement. So we'll don't see many other options here now that we made the new high here. So makes it the most likely one. The other one would be 1, 2, 3, 4, and wave 5 still hasn't finished. But then that is like 1, 2, 3, 4, 5. And if that's only the first wave of the fifth wave, it just would be too big in relation to the previous wave moves. So I think the most likely candidate is actually this one here. And if NVIDIA is like that, then SPY is also going to look like that. Or not SPY, but in SPY we already covered that we have 4 and still a wave 5 push to come. So with upsides at 587 and 601, but the Nasdaq might be similar-ish with their NDX. Although there, yeah, no, there it's actually similar. 1, 2, either it's A, B, C, less likely now that we look at NVIDIA. So it's potentially 1, 2, and now we have the next 1, 2, 1, 2. So yeah, like also stronger upwards possibilities here. NVIDIA is clearer on that pattern than the Nasdaq is, but I think NVIDIA entries wouldn't be that bad right now. So with a stop loss could theoretically be at 1171 or 1050 or 1069. So now I'm at Novavax, no, misclicked. So obviously NVIDIA is higher. So with a stop loss at the low that we had here, actually 1114.70. So 1% risk, no, 10% risk, sorry. And upside hard to determine right now, but I think, yeah, like with that development, so with that new spike here, makes it a decent possibility. And last but not least, we can check out real estate. I see that there's some upside. So here it also looks like, I'm gonna zoom in a little bit, like we reached the 50% retracement, we reached the wave C minimum target. And we didn't reach the 100% line, but that's okay. But it looks like we finished this corrective move, which means we have 1, 2, 3, 4, 5. A, B, C, retracing 50%, and which means then from here we would expect 5 more waves up. We can see that that's easily 50 to 100% upside that's left here. If we zoom out again, maybe not that far, we don't need to go that far. The big question is basically, is this 1, 2, 3, 4, 4, and we're getting 5? Is this 1, 2, 3, 4, 5? And this is then, so the orthodox end of the wave is here. This is our corrective pattern, in which case we would retrace almost exactly 61.8% in our wave 2. Whereas if we went up here, then our retracement isn't as nice, yeah. So either this turns into a big, so either this is 1, 2, 3, 4, and we get wave 5, which means upside, where we here have the next 1, 2, 3, 4, and 5, yeah. Or this here is wave 1, 2, and we get wave 3, or the whole thing in some form is the same variation, but A, B, C, or A, B, C, and we basically, after we reach point C, are going down further. Either way, no matter how we label it here, there is still upside to get. However, risk-reward ratio is not as great as in, for example, Novavax. It's hard to determine where exactly to put the stop loss, because theoretically it should be down here, because if that correction is not finished yet, we would get a further move down first, yeah. So yeah, I think there is more upside to come, and I think there is more than 100% return still left to get, actually more than 200, but risk-reward ratio is not as nice as in other things that we have, and anyway, I've tied up all my capital right now. And yeah, that's going to be pretty much it for today. So in a couple of stocks, we're still just waiting to get more candles on the chart to get a clearer picture of how the current pattern could be labeled. Ooh, sorry, guys. But we also have a few contestants like Novavax and so on, and Barnes & Noble Educational, where we actually have decent patterns and could already have orders placed, or already have positions and are waiting for the pattern to play out. Like that sums it up for today. And with that, I'm actually going to call it a day. We're going to have to see how things develop further, obviously. And yeah, don't forget, like, subscribe, enable notification, and then we see how things develop tomorrow with another episode of Daily Market Mastery with me, Christian Rauchenwald. Thanks for stopping by. Thanks, Akashi, especially for stopping by and for interacting with me in the chat. And yeah, wish you all a pleasant rest of the day, and then